All right, it's market update time. I wanted to begin with two simple equity futures charts. One of them is the ES and one of them is the RTY. And the reason I wanted to show these is because they're shaped similarly, but they tell a bit of a different story. These are both 4-hour bars, and they go back pretty much for the whole of this year. Let me see, where do they go back to? Not that it really matters, but goes back to, January 17 or so. So the ES is looking ready to fall again because it is beneath these two very potent lines right here, which you may recall we were really struggling with for a long time. It kept really being indecisive what to do with these lines. Sometimes it was trapped between them, sometimes it would escape, and ever since here, for the past couple of days, it's been trapped beneath it. The two lines, incidentally, the green one represents what I think of as an important price gap. That is this gap that took place during this lurch from the first to the second week of June. And the red line is a Fibonacci, as many lines are these days. And so we're beneath them both right now. And going back to the 4-hour chart, we've got this very well-formed topping pattern here. So if for some reason we blow past these lines, then the next this is a minor point of resistance, and the next really strong one is up here at 4,400. So, we could rally over 100 points from here. It's possible. But at the moment, I think it's got to conquer these lines first. So simply stated, I think the ES is looking bearish again after just like one day of recovery. The small caps tell a different story because they've been a lot weaker. Now, on the one hand, the topping pattern is cleaner. They're both equally nice, but everything above this dashed line is exceptionally clean. And when this was transpiring, I let it be known that this was a fantastic setup, and it was. It fell, it recovered, and it didn't even make it back to the neckline. It actually rather beautifully made it just to the Fibonacci and then fell hard. And so this is much lower from the Fib and the neckline than the ES. So it's more bullish in as much as if we do rally, it would have an easier time making a substantial gain. Now, I think any of this will terminate, but as far as what's going to happen Thursday and Friday, that's kind of the big question mark. My own configuration, as you know, is long XLU calls and long LQD calls. So if we do rally, that's okay. And in a perfect world, of course, if equities fall and those two things rise, that's even better. But not banking on that. But getting over to our more normal chart platform here, I just wanted to glance at a few key index items. So the first one, all world. This topping pattern has filled very nicely, and we started to recover on Wednesday some. If we do rally, then something like this area here would, I think, be the termination point. So in case you're not getting it, let me just speak very broadly. I have every confidence that like in 2 weeks, 3 weeks from now, we will easily take out the lows we've seen. We could do it tomorrow, but I think October we will take out these recent lows. My big question mark is, will we have more of a bounce before then? Because we've only bounced for like literally hours at this point. And so this zone here is the kind of bounce that would make sense. I don't know necessarily which all of these I'm going to want to focus on. This is 28 different items, and there's just a few I want to touch on right here. Here in the case of the NASDAQ Composite, the strong resistance point would be right up here. This gap, this price gap. So by the very nature of having those two big longs, you can tell I'm very much on the fence right now. I'm hedged just in case we do rally, but I think any rally of merit should simply be sold. It's just merit's really close observation, just how much it'll do so. Here's the NASDAQ 100 as another example, and this is quite clean. Here's the Fibonacci, and as you can see, we have found real support here. Notice how it cannot break through that with any meaningful amount. And this price gap here, I think, is the magnetic draw right now. Here's the OEX, and in this instance, this green line here represented the base for this pattern, and now it's acting as support. Breaking this line would be a big deal because this is a pretty well-formed little top, and breaking this line would essentially shove aside the powerful support that this pattern beneath it has been providing. We've kind of talked about the Russell already by way of the RTY, but you can see here, and I've said over and over again that this fib marked a good target. Well, we've done it. We have done it today. So you see support all through here, and here's the head and shoulders. Here's the fall, the bounce back to the neckline, and it was almost perfect. Let me see, what is this? 1810.08 and 1809.69. So literally like 39 pennies away on a $1,800 index. That's incredible. And then we fell, and then stabilized today. So it would kind of make sense to rally to some degree, although we don't necessarily have to get back here already. We've done this. You can sort of check that checkbox. We may only rally like to here, to 1760. But the key point is that we have achieved the target as far as this goes, because this was a nice little pattern, and we got here right quick. It only took a few days to get to that green level. Let's see what else. Hit a few more big ones before we go. The SOX, of course, remains incredibly important. Semiconductor index. And I would say that so long as we do not violate this 3504.03 level, this is still viable. This is not the cleanest pattern ever, because the past few days we've been messing around inside this pink zone here. The fact that we repenetrated that here kind of blights it a bit. But provided we don't pass above this one, and of course, if we resume the weakness and take out the low we saw here, obviously the potential for this to really tumble increases, and it's kind of all up to NVIDIA at this point. So yeah, there's that. As far as utilities go, I've written about this extensively. This is really just ship shape right now. I've written at great length to my premium members about this, and as we zoom in tight on recent activity, you can see that today's low was even higher than Monday's low. In other words, this was the low for the move. And there was some wiggling and waggling and a little bit scary, but we have a clear higher low here, substantially higher low. And my view is that this is a perfectly reasonable target up here at 832.15, something like that. What was my other? Oh yeah, let's look at LQD real quick. That was the other long position. This is the corporate bonds, and in this instance, you can see that volume hasn't really done much of anything interesting there. But we bottomed on this on Tuesday, and we went up almost a full percentage point today. And in this instance, I think that a target somewhere along this level is about as ambitious as we could get. So I'll just close by saying, if we rally powerfully, and the catalyst for this may well be like Friday morning's job report, that these kinds of levels are just about as high as I think it could get. And it would be a dream come true for the bears if we got up here, because as powerful a rally as that would be, it would just really tee things up for another big leg down. And that is a good place to end, isn't it?